Good morning. I'm giving you this quick update. I'm going to start with gold and what I think or my own sentiment. Gold peaked on the daily at about 210, 2010. That's where it peaked, and we saw this deep pullback at around 1953. So, what am I saying? I may be wrong, but that is just my own sentiment. When we had this pullback, we saw what it gave us, and it came down, and we rose to this point, and we are seeing this. What I think it's happening, because if we are to move from this pullback to the upside, we should be counting a 1, 2, 3, 4, 5 to the upside, and we should break really up to say that we're in a new wave, because that is what would tell us normally that, okay, we actually in a new wave and we're not corrective. And I often say this, that in any correction, if your correction is within an extension of 100, 123, it's still a correction, not until it breaks above 161.8 extension. You shouldn't think that, oh, this is a new wave. So you trying to count 1, 2, 3, 4, 5 below 161.8 extension, that is not a new wave, and that will not be your wave 5 if we are trusting this to be a wave 4. So from here, from this point down here, and a retracement here is exactly at 123, 127, retracement to the upside, and we are seeing this move. What that means to me is that we are still in a correction, daily correction. So this is A leg, and this is a B leg to me, and that this is a C leg that we are doing. Now, where it potentially can this C leg run to? Are we done here to go up? What is happening here will tell us if we are done and we are going up. Now, for now, this is A, this is B, and is this C, and that is all to it. This is daily time frame. So for us to have this and a retracement or extension of 127 means that at least if you're going to have a running flat could either give us a 61.8 or 100. So if we don't stall at about 100, no, about 61.8, we could actually go close to this point before we go up. Once we don't break this low, if we should break this low, it means that we are coming down, and it's a deep correction. But for now, it's still that we are in A, B, and a C, and the C probably is done or not. We're going to see. Let's switch to the 4-hour time frame. Switching to the 4-hour time frame. This is what we are still talking about. This is our wave here, 1, 2, 3, and which is A, B, C of A here, and on the 4-hour time frame. So if you look at this one, then we had this move to the upside, and this is just probably an A, then the B in the middle, and the C. Because this is impulsive, it is what you should know of any C leg, which is still what? It didn't break above 161.8. So it is impulsive. It is true of a C leg, okay? So we'll still take this as an A, B. Now we are doing a C. Is this C complete? Now for us to have the, okay, let's switch to 1 hour. I don't want to waste a whole lot of time. Switch it to 1 hour time frame for us to see. Now, on the 1 hour time frame, this is still what we have. A, B, C of A, then A of B, and in the middle part here is the B of B and a C of B. So this looks like a fourth wave and a truncation of 5, probably part of B. So the peak of B is here, the low of A is here, and we are seeing a C. Now, if we are to understand what C is going to give us, C, this is around about 76 or thereabouts, or a bit below 61.8 extension, retracement to the downside. And once we don't break this low of 1953, then we are still good. Now, what can I see here? I still see that potentially we may come down. We finish this leg here, and this is actually a 5-wave structure to the downside here to run to finish this leg. It's a 5-wave structure to the downside. So this looks like an A now. It's as if we're trying to do a B in the middle here. That is what it's looking like to be a B, and this may just be A part of a B, and this may just be B part of a B, and this may just be C part of a B for us to come more down. And in coming down, we're going to be anticipating probably to buy from anywhere around this level to the upside. If you think it's going up, I do not think so. But at the same time, I don't want to buy or sell around this area. I want this wave to finish itself. And if it breaks structure to the upside, then I might be looking for a retracement to buy. Now, what structure am I talking about? What structure am I talking about? If this is A and this is B, and this retracement to the downside, or extension to the downside of A to B is not up to, 161.8, it's almost 161.8. So, but it's broke lower than 127. So I might still be thinking of a potential extended flat. If that is what I'm thinking, so I want to see this extension to the upside not to be more than 127. So where 127 would give me is around 119.99, 200, around this area. So if I don't break that extension to the upside, then I might be thinking that, yes, there's a potential. If I have the price I showed here, I may want to take a small sell to the downside with a tight stop loss around that area to sell to this point, where this will terminate. I may get about 300 pips to the downside if that happens. So we just want to know how to plan, but from here, I don't want to do anything until price makes out what it's trying to do here. This is in the middle, but from here to here, maybe if I take this as an A, B, C of a B, and the B around this area, around this area, and I see a turn. Once it does not break above it, then I can probably plan a sell with small stop loss and look for a buy below here. Once the big C, A, and a B, and a C terminates, and I go up. So we have not done a wave 5. So you trying to count here to think that it's okay, this is the whole of 4 and we're doing a 5 will be wrong. That's why at times you can't preempt. You have to constantly see your structure and see that, okay, something is changing here, let me get out. Something is changing here, let me get out. Let me see what this thing is trying to do. So because it is not stereotyped that it has to print ABC and that's all, and it's going up, or a 7 swing and it's going up. So no, it's not that. So what we are seeing now, it's a formation, most likely that this thing is going to turn out to be a 7 swing. Or in a complex formation, you can still see A, B, and a C, and it's going to go up. So that is what this is all about now. And we take this as the C leg of the ABC, okay? Where this is an A of the B, this is B of B, and this going up is an ABC, it's the C leg. And for it to terminate as a C leg, the first part is not going up as an impulse, okay? So we might be seeing an A of it and a B of it in the middle. And by the time it's finishing its own C, that C should be 5 waves. And that is one of the things that will confirm to you that, oh, you can actually sell to the downside. If you are seeing this as a 5 wave, when it gives up the B and is done with the B of this particular C of B, you know, and it's going up and it's 5 waves, then you can confidently take a sell, you know, from around this area, take a sell, you know, it might actually coincide with this peak here. Yeah. And it might actually kiss this peak here. So, and that's the area you must be watching for your price action to the downside. So if it gets there, then probably will just be coming down to make this and finish up. Now let's go to the Euro USD. Euro USD. All these things are actually wasting our time, and we have to be very careful. We saw this as a potential 1 and this as a potential 2, and we said the price was trying to, you know, warm towards the downside of the structure, you know, and it has broken all the B's that we let me bring that out. Okay, I think I've taken them out really. Okay, yes. We had one B here that's taking it out. We had a B here that's taking this B out. Now the big B, you know, is what price is aiming to take out. Once it takes out this big B now, what is happening is that it's going to break low. But we have to be very careful because the price is making very, very complex structure, you know, very complex structure. We still thinking that this is an A and this is a B. Sorry, a 2 and what are a 2? Of course, if it's making a 3, if this is 3-1 that has broken low here, and this is going to be 3-2, then we have to really see this as a possible 3-2. But for now, the way price is going up, it's quite, you know, confusing in a way. So what we can do is, if we take this as an A of this move, we should have a correction of a B and a C. And that C should run in 5 waves. And that is what is going to give us confidence that we're going to come down. So this is 61.8, this is 78, and this is 85. Price should not seem breaking above this zone here. This is the zone that price should turn down. Any breach of this area or any breach here means that it is something else that we have to look at and recalibrate. So for me, I don't want to sell, I don't want to buy around this area. I want to make out the sense, make sense out of what is happening around this area before I engage the trade. So when price is making higher low, higher highs, it's good for you. So you know it has broken a zone, come down to a zone. So you can easily, just like we planned this trade here, to know where to put our stop loss as it's breaking down. You know, let me show you that. Because that is what you need to do from time to time. Let me go to this 5 minutes time frame to see how, you know, I planned that in case price, you know, wants to do otherwise. So we started the move from here, price came down here, and we had a zone here. So price got here. So of course, because price was just going down, we almost immediately we put our stop loss around this area and we allow price to make this low again. Price created this structure, and when price was moving down around this structure, we put our stop loss around this area, and price broke this structure to make another structure around this area. Immediately price made this structure and broke low. This is an ABC format. You can always see the ABC, ABC, and this is like price is trying to print a 5-way structure to end this area. So immediately price ABC, we put our stop loss around this zone here, around this area. So, and we still have something decent from up there to the downside. So, but when price is moving this way, it's pretty much difficult for you to tell what is going to happen. It's pretty much difficult, you know, because it looks impulsive. But looking impulsive also on the lower time frame, I can't see what looks like a primary 2, and they can go on like this and break the top. They can go on like this. This is not kind of trade I want to, except if you had joined this trade around this area to put your, in fact, when the trade did this, anybody could have just, okay, oh, let me follow it. And probably you had this and the shop told, oh, let me join here, and the price came down to take you out, and price is doing this. You know, they will do this because they don't want you to be in the trade with them. So you have to be careful. You have to study what the price is printing and to know how to progress or how to join them. So I would rather want this to, if it's an impulsive and it's going to break up, let it correct deep to the downside. Take me up with it. And if it's not going to correct deep to the downside, then I don't think it's motive that is going anywhere. So if it's not going to correct deep and it's giving me an A, B, C around this area, so this is an A, probably giving me an A, B around this area to turn up, then I will be looking for that C to join a sell. So let's be careful and let's just wait out and see what the structure is trying to print. And that ends my update.